Welcome to Markets Now. I'm Michelle Rook along with Ken Beadle with Paradigm Futures. And we are seeing grain setting back today with livestock futures, some nice gains. And Kent, let's talk about the grain trade here today. Of course, we put weather premium in before the holiday. Now, are we taking weather premium back out?
I think at a minimum, what you're seeing is some profit taking. The weather forecast itself still appears to be dry and certainly above average for temperatures as at least we go through the next week. Where the focus is the week after that. The European model out 10 days does not have much in the way of rainfall for the part of the Corn Belt. The GPS does start to put some scattered showers, but nothing organized and nothing that I would say is going to offset the amount of moisture that we're going to evaporate out of the soils here over the course of the next week. That being said, it does look like a potential change in the pattern, and I think that has some folks selling what has been a very nice rally in corn.
Plus, we're a bit risk off today, especially with crude oil down as hard as it is, right?
Yeah, and here again, the crude oil has had an impact on soybean oil. We saw the palm oil markets down. We did seem to get some help from the debt reduction. I'm not sure why the crude oil market is down as much as it is, other than I think we have some speculative selling, continued speculative selling in commodities. And it's flowing to the crude oil.
We've also had some economic news out of China that would indicate that their economy is slowing down. So could that also be having an impact on that soybean complex and maybe even crude oil?
A month of May for Chinese data, and we're absolutely concerned about what that impact is going to be on energy consumption in China, as well as their demand for other commodities, and it's definitely weighing on the entire trade today.
Yeah. So you also mentioned profit taking here, and of course, July corn got above the $6 mark, but then kind of ran into resistance around that 40-day moving average, didn't it?
Plunged it on Friday, wasn't able to take it out. It stands as the major resistance point. We've also got some fib retracements in that area as well. So maybe not surprising that after a 50-cent rally that we were able to manage last week, that we're getting a little bit of profit taking and speculative selling once again.
Yeah. So how much of a setback do you think or retracement will we get in corn and soybeans in particular?
Where I would anticipate we're going to find some support at the 585 to 590 in the July corn, and I do think that these corn at 5 to 505 will probably find some support. Quite frankly, as the temperatures start to rise and we don't see much rain this week, I do think traders may start to get a little bit nervous again, and they're going to need to see our actual rainfall in that 6 to 10, 8 to 14 day forecast, or we're going to go right back up again.
Yeah. What about wheat? Is that market also taking out weather premium because we've had good rains in a lot of HRW areas, maybe too much rain in some instances, but is the mentality of that market that this crop at least isn't getting any smaller?
I would expect that the crop is actually getting a little bit bigger. With the amount of rainfall that we've had, you've got acres that are in that poor to very poor category, and those are probably lost. But the acres that were in the fair category, could be progressing toward good, and the good acres could be progressing toward very good. This is the right time of the year to get to add yield with some moisture, and we're definitely getting it down in that part of the country.
You bet. Is there other things weighing on that wheat market, though? I know European prices down. We've got our dollar up. And so are those also spilling over or not, Kent?
Well, there's that. And then there's also the Ukrainian export corridor. And that's something that we've been watching closely. And you get varying comments day to day as to what what's happening there. There is still some optimism that at least out of 2 of the 3 ports, we might be able to start to see some exports again. And it seemed like last week we would trade the wheat lower one day on rain and then higher the next day on the corridor. If you're not getting any help from the corridor, you're going to be able to take the wheat market back down.
Gotcha. Cattle market. We've got new contract highs in some of the live cattle and feeder cattle contracts again here today. We had higher weekly closes. I know a lot of this is about, what's going on with the debt ceiling talks and cash. So what do you see in both of those areas?
Surprised at last week's firmness in the cash and the fact that the cutout managed to reverse back and start moving higher again. Historically, in bull market years, we do tend to take a pause in the cattle in the May-June timeframe, and yet it appears as though the cash weakness has kind of run its course.
Right.
And we're looking for some higher cash again this week, and that's helping the futures market make new highs.
Yeah, and it sounds like box clearance was pretty good, or meat clearance was pretty good over this holiday weekend too.
And the consumer confidence numbers have been a little bit better, and we're managing to still clear this product. Of course, we have less product than we had a year ago, and that's definitely helping us trade at the high levels that we're at.
Yeah, and then you mentioned the debt ceiling talks. At least we have some sort of a resolution between the White House and McCarthy, and so those are starting to progress, and that's taking some of the nervousness out of this market too, isn't it?
If we were going to default on our debt, that was going to bring some real concern about a more significant recession. Obviously, just some very bad things might happen in the financial markets, and the stock market obviously wouldn't have liked it, and that would have hurt consumer confidence dramatically, which probably would have had a very bearish impact on beef demand.
Absolutely. So the hog market, we've got some limit up moves today. Is this just all corrective buying here, or short covering, or not?
Buyers for something that would indicate some sort of fundamental reason for today's move. I'm not sure that we're really seeing it. The 2-day projection for the CME index is actually a little bit lower yet this morning. So I don't see it necessarily being cash. But, we did add shorts in the CFTC report on Friday. We are dramatically oversold. And, we do have a huge discount to beef prices right now. At some point, we just have to believe that pork demand is going to catch with the consumer at the huge discount that we're seeing to beef. Now, we've got to see that discount show up at the grocer. And that's been part of our problem, is that what's been happening is that the margin at the grocer has been getting better, and it hasn't necessarily been flowing down to the consumer. If that starts to happen, you should definitely see pork demand pick up.
Absolutely. Thanks so much for joining us, Kent Beadle with Paradigm Futures, and that's Markets Now.